Investing in the stock market requires a comprehensive understanding of various factors, including the direction of the general market. Our study finds that 3 out of 4 stocks tend to move in the direction of the general market, making it a critical piece of information for investors. That's where Market Outlook comes in. Our tool is designed to help you navigate the market direction with confidence, empowering you to make informed investment decisions. Market Outlook has two objectives: to teach you how to analyze the market direction yourself and to provide quick access to the insights of our expert analysts. Whether you are a seasoned investor or just starting out, Market Outlook is the perfect tool to help you reach your financial goals. Before making a decision on stock purchases, you need to know whether the market is moving up, down, or sideways. With its comprehensive analysis, Market Outlook is the ultimate tool for anyone looking to succeed in the stock market. To access this tool, click on the Research Tools and select Market Outlook option. Or you can directly click on the Market Outlook button here. Once you are on the Market Outlook page, you can read all the reports that our market experts are writing daily to keep you posted on the market actions. On the top right-hand side, if you click on Pre-Market, you can see all the pre-market reports that we publish every day before market opens. The big picture reports are published every day after the market close. This report basically tells you how the market performed during the day or week, the best and worst performing sectors, and keep you posted on key market news. We publish a lot of articles on various subjects like change of market trend, monetary policy, budget, our derivative views, etc. under the report section. Below this, you can see a snapshot of the current market condition. You can click on the view history and see the different time frames when we changed the market condition. At any point of time, we designate the market as confirmed uptrend, uptrend under pressure, correction, and rally attempt. A confirmed uptrend is a normal rising market. This is the best time to be in stocks. Investors should make most stock purchases when the market is in a confirmed uptrend. Inevitably, the stock market will start to weaken as investors take profits or anticipate a slower economy. The Nifty 50 and Sensex will start suffering distribution days, that is, decline in rising volume. That's a sign that institutional investors are unwinding positions. You'll also see leading stocks start to crack. Uptrend under pressure is our way to warn investors to take a defensive posture. When indexes show persistent weakness and top stocks sell off, the market falls into a correction. Under this designation, avoid buying stocks altogether. Investors must start raising cash. Once you are in a correction, the market will eventually attempt to make an upward recovery. We designate this as rally attempt. This is kind of a limbo stage when you are not certain which way the market will move. It can undercut the prior lows and fall into the correction again, or can enter confirmed uptrend with strong follow-up buying.